This is what I really want to get into with you today. I think that it's actually going to help you see a lot clearer. It helps me see a lot clearer because I think it adds a lot to the overall Bitcoin conversation out there. How I'm viewing this, or what I'm looking at, is this. Here's what I'm looking at Bitcoin. Here's how you're all looking at Bitcoin. And yeah, I mean, by the way, Bitcoin just made, 5 weeks ago, a new all-time high. We're looking at a very bullish structure of Bitcoin as far as making those higher swing highs, the higher lows. You all know that's what continued from here up until we made that right over here is where we made that first lower low, and then we made a lower high. That's where this broke down. We're not seeing that yet here today. Right now, it still looks good. That could change. But let's open this up a little bit. Let's view this a little bit differently. And I'm going to just jump in over here as today is the 15th of December. Now, originally, what I was trying to do over here, I was figuring out, are we looking at the beginning of the year, that January, February, March, first quarter into the second quarter, the flows of more of the traditional markets and the inflows, right? And I was trying to take a look at what was happening. I knew that this started off really well, but then we had the crisis over here. And then, the beginning of this year started off really well, wondering as we get past this last hurdle, if that's what we're in store for. And that seems to be like, well, yeah, that's holding on to a bit of hopium. That's true. And I hope that it does happen. That would be fantastic. And that would be great. We don't know that that's going to happen, which is why we, at the end of the day, we follow price and the technicals and follow how price is reacting around that. But then as I was doing that or experimenting with that, what I found was, the 15th, and this was just kind of like, that Santa Claus rally, that 15 kind of seems to historically front run those first quarter inflows. From what I've seen in the equity markets, 134% of the yearly inflows occur in January. How could it be 134%? Well, because you have outflows at other points of the month. 134% in January alone. Are we going to get that January bounce that's been happening? Well, I don't know. That just led to this. But then what I'm looking at over here, if you start doing the year over year from the 15th to the 15th, for the last 3 years, Bitcoin has averaged 145% year over year. Not only that, it's kind of straight up. Well, that's interesting, right? And that's bullish. And could this be more of the mini bulls and mini bears that we're seeing in the market? Mini bulls, mini bears. And if that's the case, are you good? Are you good with an asset that's putting up 145% year over year, right? Now, here's the thing, though. If you back up a little bit, if you just back up and you go out, and you go out not 3 years, but you go out 5 years, Bitcoin is still averaging 145% a year. Oh, wait. So you're telling me that all that happened over here was that we overshot and then came back down, but at the same time are still averaging that 145% a year? Yep. And you could even go out one more year if you want. You could even go out to, I need the thing over here. So let me put the thing in just to make it pretty. 14th, I'll move it over later. You add all these up for the last 6 years, and Bitcoin is averaging 145% a year. All right, so that's pretty good in that perspective. What does that mean, right? Well, a couple of things, right? So the new Bitcoin cycle, this is catchy. This is not the cycle, right? December 15th, year over year, last 12 months, 142%. Average return last 3 years, 145. Last 6 years, 145%. Where's the diminishing returns? It's interesting if you think about it like that, because people are able to view this, they're not able to really view this, right? How we've been viewing it, and that's taking away, let me just take it away, have a hard time dealing with this. It's easier for them to view this, but ever since we've entered the hype phase, exited the hype phase, Bitcoin has been averaging 145% a year over year. So where are the diminishing returns, right? And is that our expectations going forward? Possibly. You all know that when we did the math, right? Remember doing the math over here? You're starting with $1,000 is $10,000, right? Starting with $10,000. You're adding 250% a month for the next 11 years. That's $3,000 a year at a 70%, year over year. you're looking at $5 million. Foundational Bitcoin plan that needs to be put in place. If you're new here and have not watched that, go ahead and, thank you, Control. Go ahead and watch that video or bring it up on a tab so you could watch it afterwards because it's foundational. Do I think that we're going to go down to 70%? It doesn't seem with the work that we've done over here together over the last week, what looks like the hype phase, the facing reality, and the ultimate market opportunity, that we are looking at going down towards 70%. But hey, like, underestimate, let's plan ahead. Very interesting. Over the last 6 years, we're looking at an average return of 145%. It makes it a lot easier, or I think it frames it a lot better for everyone if they just have this as their expectation, going forward. And that means whether or not we overshoot, because we may overshoot in 2022. And if that happens, then we expect a reversion to the mean. What happens if we do see something like this play out over here? And this is quite bearish scenario that takes place, right? And we saw like a bearish scenario take place. Do you think that we then revert back? I do. And when you're looking at these market cycles with that type of context over there, and you could see, well, actually, over the last 2 cycles, it's actually much of the same. There's not too much different. And now viewing this one over here, this one I can't view, right? Because this wasn't even a complete cycle. Bitcoin wasn't even trading. It was just, on an exchange. And then this is like half the cycle. So this doesn't really make too much sense. But if I'm viewing this, like, can I just see now the reversion down towards the mean that's been occurring? If I'm looking at Bitcoin since days of the halving, a lot of people are talking about the bear markets decreasing. Is that possible? Anything's possible. I do believe that the structure or nature of the cycles, it looks like they are changing. At the same time, I'm looking at this bear market. It lasted exactly 12 months. From the peak to the low, I'm looking at this bear market, and this lasted 12 months and 2 weeks. No, I'm sorry, it's the other way around. This one was 12 months and 2 weeks. This one was exactly 12 months. So that's not really like a decreasing in the length of the bear market. I see a lot of the same actually. And then viewing this off the cycle low, again, what do we see? I could definitely say over here diminishing returns. It's very clear that we saw diminishing returns from the 2012 cycle into the 2016 cycle. I think that's a little bit different in viewing this as the hype cycle, the hype phase on that life cycle of technology adoption, right? But since then, we've leveled out and we're not seeing diminishing returns. We're seeing consistent returns. And then you could see it very clearly over here. Yeah, over here we went above, right? But then we went above. Are we going to see a reversion to the mean? That's what we're waiting on next. That's what I believe happens. That's what looks like it's going to happen. Is it possible that in this coming year, that we don't see like the down move over here? Everyone's quite bearish on Bitcoin, but we see more of a bit of an overshoot to the upside. That would seem probable and or logical. And again, whether or not that's during the year or afterwards, let me go ahead and push this up over here. We should see a diversion to the ring, but that makes me feel good. And I'm very, 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 very happy compounding 140% returns year over year. Again, doing the math and just doing that for half that amount at 70%, one is also very, very, very happy. And I think viewing that in this little bit more of a pragmatic view, right? So could anyone, by the way, looking at that or just framed like that, could anyone make the case for diminishing returns? I want to make sure to put something out there expressing this view to help other people have that same type of like calmness and clarity rather than like trying to debunk the theory of diminishing returns. But at the same time, if you're looking at 6 years, 145% return year over year, the last 12 months, 142%, the last 3 years, half that, 145%, we're not experiencing diminishing returns at this point. And I think breaking that up from the hype phase where you have those aggressive increased returns, if you make it out of the hype phase, right? At that point, you go, next phase is facing reality. Does the trajectory of the returns change at all during this particular phase? That is the question. In looking at Amazon, in looking at the Microsoft when they were in that channel, it seems to me that from the time they exited the hype phase, you could put it in the bottom of the trend line on Jesse's charts, he has it more like the S, rightfully so, which is like this. right? And it's from the point you exit into the face and reality phase up through there that you're able to make that channel. It's why I believe the channel that we're looking at is the channel. That doesn't mean going forward that we don't see a different nature of the cycles with those mini bulls and mini bears, because we might be seeing year over year continuing to average that 145 without having the large deviations to the upside and or the large deviations to the downside. We just might be looking at more subdued behavior. And that seems to be where we're at. And again, at the same time, I'm not writing off the behavior of the 4-year cycles. It's going to still have an element. It's going to have an effect, especially that 2024 halving. It's not priced in. I think that we definitely will see that. But at the same time, we might be seeing more of that subdued volatility to the upside and to the downside going forward. And I'm not writing off that we don't see any type of parabolic blow off top from this current cycle. It's still possible. Now, we've looked at the changing behavior, and we could definitely see that it's changing. As it's changing in real time, we're trying to be there with it. But let's see what happens over the next few months and, trade accordingly. I think that's it right there. We're going to end it right there. Also, adding more mini bull and bear markets will scare off less people to invest. This is for the institutional adoption of Bitcoin, which is very, very important at this stage. When we're talking about those, even though the Bitcoin bonds, right? The mini bull, mini bear is going to help a lot more money come into it and continue to take it up. I think it's helpful just viewing what is. I mean, we're just looking at the data. We're not like the data saying to us over the last 3 years, Bitcoin has had 145% return year over year. That's not like just stopping there. It's also going back, if you go back 5 years, again, this was just a reversion to the mean. And you go back 6 years, ever since we've entered outside of the hype cycle, that's what's happened on Bitcoin. We're not seeing diminishing returns. Comparing things to the hype cycle, of course, you could compare Microsoft or Amazon or anyone to the hype cycle, and you're going to look and say, oh, it's diminishing returns. But you look at them over the last, 20 years, and you're not looking at the same thing. You're seeing exponential returns.